Recording. Cool. Many of the investment advisors I follow say that it makes sense for most people to have some exposure to crypto as a hedge against inflation and the continued degradation of the US dollar as the preeminent global reserve currency. That exposure should be thought of in a similar fashion as gold, as a hedging instrument, which means maybe up to 5% of your net worth, single digits. A good way to think of it is in terms of how likely you feel it is that we'll have the kind of hyperinflation that leads to a serious currency devaluation or even a collapse. If you feel 100% sure that won't happen, you probably shouldn't invest in crypto as a hedge and probably not gold either. If you're 98% sure, then consider investing 2% of your net worth into crypto, gold, some combination of those. And there are ways to invest in crypto directly, including several well-established exchanges like Coinbase or Gemini. It's easy to set up an account online and you all can do it. They do ask for quite a bit of information, but this is all to not run afoul of anti-money laundering laws, and it's treated just like a mutual fund or any other online brokerage account you might have. You can also invest in the publicly traded Grayscale Bitcoin Trust, which is an entity that owns Bitcoin, and you own a piece of that effectively. So it's a publicly traded trust, holds Bitcoin, you get a chunk of that. It has a market cap of $27 billion as of a few days ago. It's been hit a little bit with the volatility we've had in the markets, but hey, that's been the story of Bitcoin and crypto since its beginnings over a decade ago. Personally, I've chosen to invest with a professional manager who specializes in crypto, aka not just Bitcoin. And with that, I would like to introduce my guest, Putnam Kling of Stormborn Partners. Stormborn, yep, just like Game of Thrones. Stormborn is a new fund that's growing fast, but it's limited to qualified investors, which won't be a fit for everyone. But if you do fit into this category and are interested in learning more about Stormborn, please reach out to me and I will connect you with Putnam. Welcome, Putnam Kling.
Jim, great to be here.
Yeah, it's great to have you here. I mean, all things crypto. It's incredible what has happened over the past few years with Bitcoin and crypto. Just for folks on the call here, I met Putnam Kling through his brother, who was a friend of mine from Jackson, Wyoming. Breck was a ski partner of mine and just a fun, smart guy to be around among several that I met and still keep in touch with in Jackson, Wyoming. And Putnam is his brother, and I've been interested in crypto for some time. I wrote about it pretty extensively in my book, Locally Grown, The Art of Sustainable Government, about ways to use cryptocurrency to incentivize good behavior in society, because you can do that with, and we're going to talk more about that, the types of cryptos that have utility to them besides just a store of value. But Putnam is the expert. This is it's a market that has some complexity, and he's a really smart guy that manages other people's money, lots of it, in the sort of conventional sense of the word. But why don't you give us a little background on yourself, Putnam, and how Stormborn got started?
Sure. So I started my career at Morgan Stanley, and I was primarily focused on healthcare and tech. After leaving Morgan Stanley, I launched my own independent firm down here in South Florida, and I have spent 8 years running a healthcare and a tech strategy. So a lot of emerging biotech, a lot of disruptive technologies, both in the tech space as well as consumer discretionary. So my brother Breck, who you mentioned, famously circulated an email to our family back in 2010. He said,
"Oh my word."
He said, Bitcoin's gone from $6 to $9. Everyone should think about putting 50,000 bucks into this project. And it fell on deaf ears, regrettably. But he likes to recirculate that email every now and then to remind us that he's been a follower of the space for some time. So it came on my radar pretty early on, and like many of your listeners, I was a skeptic for the first few years of crypto. I was a skeptic and needed to be won over. And I watched the 2017 bubble with skepticism because I thought it was heavily retail driven. The exchanges and the infrastructure in place were not attractive enough for me to really participate in that run up, although I did think that the underlying technology was interesting. Fast forward to this past year of 2020, COVID hits, and we see the Federal Reserve basically say they're going to go QE infinity, that there's no limit to the amount of money they're willing to print in order to support our markets. So I took a look at gold. As a young guy, I'm 37. I do not find gold and precious metals to be all that appealing. I would say that echoes the majority of my generation. So I went back and reread the Bitcoin white paper. Bitcoin white paper is a short document, heavily computer science based, but lays out the thesis for blockchain and Bitcoin in particular as the next generation store and transfer of value. Needless to say, it had my attention again. Then I went deep down the rabbit hole into blockchain technology and the other cryptocurrencies surrounding Bitcoin. So Stormborn Partners, which is the fund that I'm partnered with my brother Breck in, Stormborn, the name, of course, Game of Thrones, but also because Bitcoin was born in the storm of the 2008 financial crisis, and it's really weathered that storm over the last 12 years.
Great analogy.
So to us, we think that it's a durable, hard asset at this point, and that it deserves to be seen as such. So here's our thesis. Our thesis is that, number one, Bitcoin represents an intriguing store of value based on mathematics. It's capped at 21 million coins that will ever exist. It becomes more deflationary over time because the supply of it becomes cut in half by mining rewards every 4 years, and we'll get into the details of that. But in addition to Bitcoin being digital gold or the next generation store and transfer of value method, blockchain, which was invented through Bitcoin, has led to the creation of smart contracts, decentralized finance, and other cryptocurrencies that I believe, really are the most disruptive technology since the invention of the internet in the 90s.
Amazing. I mean, it really has that feel. I am old enough to remember that. I was midway through my career, as a matter of working in Silicon Valley, and actually moved there from the East Coast to work for a startup, and the same year that I got married. So we were right there in the midst of it, and all of us scratching our heads there. This is 1999, 98 timeframe. Like, how can these companies be worth so much money with no revenue, no profit? I mean, the laws of economics gone out the window, and they did for a while. The bubble burst, but the key companies that emerged from that have changed our world. I mean, Google, Facebook. I mean, if you remember Yahoo and eBay and Pets.com, they all sort of were the fluff that faded away. But you had these amazing, what turns out to be the most valuable companies on earth that emerged from that. So this has got the same sort of look and feel, in my opinion. But can you talk? We're certainly have got at nosebleed levels here with crypto and with Bitcoin. Are we in a bubble that's going to collapse again?
No, I do not believe that we are. I believe that it is still very early in its adoption cycle. Therefore, most people are viewing it as a speculative investment. However, the bubble that inevitably burst in 2017 was primarily retail driven. This is a very different look and feel to
so
this.
The bubble of crypto and Bitcoin specifically was retail driven. Okay, go ahead.
Was in 2017, it was heavily retail driven. All the data supports that. This time around, it's very different. We are looking at institutional buyers. You're looking at the Paul Tudor Jones, Stan Druckenmiller, Bill Miller, some of the great investment minds of our time, in addition to companies like MicroStrategy and Tesla viewing this as a treasury reserve asset on their balance sheet and a hedge to potential inflation that may come through QE infinity. So the players involved this time, far more sophisticated. I think they're taking a far longer outlook in regards to their investment time horizon. But I would also argue that volatility in this space is here for the foreseeable future.
Sure.
So when you see
we're seeing that today, of course, in the last couple of days.
When you see Bitcoin go from 58,000 back to 47,000, it's really business as usual when you look at the pattern and all the data behind it. Bitcoin inevitably in the past has overshot and then it's sort of calmed down after these market cycles. And I do believe that with institutional adoption, there's going to be continued volatility for the foreseeable future. But I do believe that the floor set under Bitcoin and crypto in particular is going to be higher than people expect.
Yep. Talk a little bit, if you would, about the Bitcoin bottleneck. I know you talk about that in your deck, but I think that statistic among many really just stood out to me, especially now when you have Bitcoin at 50, 47, 48,000, $50,000 a coin. This is not for the, to own one coin, the average American's not going to be able to do that. They're going to own fractional interests, which you can at the exchanges. But as it gets more expensive, this becomes a kind of a rich man's game, if you will. But you kind of talk about this Bitcoin bottleneck. What is that?
Sure. So Bitcoin's really an adoption story. The bottleneck, the image that we've drawn up, basically takes into account institutional investors, high net worth individuals, family offices, and retail investors, millennials, et cetera, all clamoring and chasing what's currently 18.5 million Bitcoin that are currently in supply. So what happens after you have these demand,
And a
supply,
very
and
small percentage of those people are actually invested in the Bitcoin.
correct. There's currently over 46 million millionaires and billionaires worldwide, and there's only 18.5 million Bitcoin in circulation. So as Bitcoin becomes more mainstream, there's more and more people clamoring for a smaller piece of the pie. So if Bitcoin is Econ 101, it's a supply and demand story. Currently, 18.5 million Bitcoin have ever been created. 4 million, an estimated 4 million have been lost. And not to spook your listeners, the 4 million were lost in the very early days,
right,
when people were giving it as a birthday gag gift, when they were ordering, you paying 10,000 Bitcoin for 2 pizzas from Papa John's. And
that's
that's a famous,
incredible.
it's a,
Just lost, billions of dollars lost, just floating there. But the good news is that's never going to get sold.
it's not. So we have to remove that portion of Bitcoin from the equation. Then you get down to
I have a
basically,
friend, just not to not to harp on that, but I have a very good friend, and who has been on this show as a guest, that was an early miner of Bitcoin. He's a really super smart technologist, and he's probably going to get so mad that I'm saying this, but he's got a good sense of humor. But he had several hundred Bitcoin when they were pennies that he had mined. And this is a guy that sold his early travel company to Google. So he's pretty well off, and he's got another startup, reinventing email and or actually addressing the phishing problem with security. But he's a security guy. He was mining it, and then he has these servers in his house, right? Because he works out of his office, his house. His house is like a data center almost. So he was mining the Bitcoin, and he had several hundred. That maybe several hundred. I think he might have even had several thousand. I think he said, and it wasn't worth anything. And he was starting up his new business. He just reformatted the drive, and just gone. So Dave, I have firsthand testimony of a guy that lost all that Bitcoin, and so he's part of that whatever 4 million that's just in the ether. It will never be recovered.
so, and not to spook your listeners once again, but those lost Bitcoin were really lost at a time where there weren't the regulated exchanges and these
right.
self-storage custody methods that now exist. So the space has definitely matured. So those 4 million lost Bitcoin, albeit unfortunate, actually benefit current investors to a substantial degree because it makes the supply that much smaller. So if you remove those 4 million lost Bitcoin, then you're really looking at about 14.5 million Bitcoin in circulation, of which we estimate an 11 million are held in cold storage and have been held there for quite some time. Cold storage meaning mostly long-term investors who are securing in a very secure way. And therefore you're left with about 3.5 million Bitcoin that are sloshing around on these exchanges.
Wow.
So think about this: as Bitcoin captures the world's attention,
47 million millionaires and billionaires representing trillions of dollars, chasing effectively 3.5 million or 4 million coins.
and that is the bottleneck. The bottleneck
Wow.
is there are a large number, and that doesn't even take into account millennial and retail investors. generation younger than mine that understand that the internet deserves a native currency, right? For younger people, it's not that surprising to them to understand. They never step foot in a bank. All they know is digital finance. So when you factor in all those groups of people coming into this one specific asset class, and generally they start with Bitcoin, there's demand is certainly outstripping supply, and that's why
Yeah.
you see these really violent moves to the upside like we've been seeing over the last 6-7 months here.
That's great. So one of the things that got me excited about you guys, about Stormborn, is the data-driven approach that you use. I'm a data guy. I like to, slice and dice. Help becomes an important part of the decision-making process in this day and age. Um, when you told me about your findings on the correlation between Bitcoin and Ether, if you recall, folks, and earlier in the broadcast today, I talked about Ethereum, and it's as an improvement over Bitcoin as a utility value that other tokens and other applications can be built upon using this currency to reward whatever kind of behavior, whether it's stickiness to advertising, or it's a real estate application that rewards the safety protocols around that. But Ethereum is the next biggest um, crypto next to Bitcoin, and you found some correlations there and a few other large cryptos that really sort of said, "Wow, they're paying attention to this because it's not just Bitcoin." Can you share some of those insights?
Sure. So Bitcoin, the network went live in January of 2009. Ethereum, the network went live in July of 2015. So we've compiled an immense amount of data to really see how the two cryptocurrencies behave against each other. So it's very interesting that this data can actually be translated to see at specific times you can expect Ethereum to behave after Bitcoin's made a big move to the upside or a big move to the downside. So all data, to give you an example, Bitcoin began its large run up in the beginning of November. It was trading at 15,000. As of December 31st, it closed around 29,000. All of our data points were flashing that it was time to take a larger position in Ethereum. So we took that larger position, and Ethereum then outperformed Bitcoin substantially over the last 6-week time frame versus Bitcoin. So the idea within the fund is that we're trading volatility. Number one, we recognize how the cryptocurrencies behave against each other. So Bitcoin and Ethereum are a very attractive trading pair for us. They're also the two largest and dominate the majority of the cryptocurrency market as a whole. But then there's other projects as well. Chainlink, which is a top 10 cryptocurrency, is the least correlated asset to Bitcoin amongst the top 20 coins. It's also a great project from a fundamental standpoint. We don't have to touch on that. But as far as the way that they behave against one another is something that our fund has identified, and we've been able to take advantage of that.
That's great. Now, again, just getting back to Bitcoin and cryptos generally being on the blockchain are quite secure. When I just regaled my audience with the story of my friend losing thousands of Bitcoin, they're probably like, "Oh, I don't want to go anywhere near this." But uh, as you probably said, it's now institutionalized, so that those sorts of I mean, you still could do that if you had it in cold storage, but um, people are wiser about how to treat it like you would treat gold, basically, or better. Um, but because it's a digital asset, right? We're learning in this day and age things that we think are secure from hackers, whether it's our government or the banks that we're at, they seem to all be prey. Has Bitcoin been hacked, and if not, why?
The Bitcoin network has never been hacked. And the reason it has not been hacked is because it's considered a decentralized network. Decentralized simply means that it's processed on tens of thousands of computers around the world 24/7. Because there's not one single entity or a choke point or point of weakness, the network itself has never been hacked. That being said, people that have lost their Bitcoin, as nightmarish as those scenarios are, they've lost it due to careless oversight in how they decided to store it themselves, or they were investing through exchanges in the very early days that were not large regulated entities like the ones that we have today. And one particular exchange, Mt. Gox, got hacked.
I remember
People,
that.
people lost a lot of their Bitcoin holdings. It was a terrible situation. But what we see today in 2021 with companies like Coinbase and Gemini and BitGo and Binance and these other large exchanges. They're state regulated. Our fund chooses to custody with Gemini because we like the Winklevoss twins. We've got to know their service team very well. They have the highest level of security in the crypto exchange space, and they have insurance over their cryptocurrency that's stored there. So for us, they checked all the boxes, and it's very similar these days to how I would trade on Schwab or TD Ameritrade on their institutional platforms. And you have a service team you can call at any second. So the other reason why I would say that this adoption phase, we're still in the early stage, but we're starting to come into a very attractive time for all of those investors we mentioned before, is because the infrastructure is now built around this space where anyone can feel comfortable going and buying this online, or a fund like ourselves trusting our assets to a regulated, insured custodian of reputable folk.
Got it. Got it. So I just read an article a couple days ago, as a matter of fact. There are lots of people that talk differently about Bitcoin. Some people are not big fans. Um, and we're going to talk. I'm actually going to talk about that a little bit later. But um, this particular article, and I think I sent it to you to read, so you get some background on it. It questioned whether Bitcoin was a better option than gold as a store of value and as a currency. So I know the author who wrote this is hyping gold. He's kind of a gold bug. He might even have a gold fund, but he does raise some interesting angles. Give me your thoughts on that.
So I did read the article. I would say he's definitely looking at the world through gold-tinted glasses, undoubtedly. And very smart guy, by the way. But what happened with Nixon taking us off the gold standard? I really think he let the genie out of the bottle, and to get the genie to go back in, I think it would be a major feat in itself. So the idea of a gold-backed currency, I personally feel is not going to be a reality in the future.
Because that's what he's talking about. Hey, the only path forward to all this hyperinflation and money printing is go back to sound money, and we used to have that with gold. So, but as you said, the genie's out of the bottle.
Sure. I mean, I could say I wish that we never went off that standard and we still had sound money. But the problem is that we have gone out. The cat is out of the bag, and the issue now being, gold versus Bitcoin. Let's think about the two of them for a second. Gold has been around for almost as long as society has been around, right? It's been a store of value since as far back as we can think. But there's a few things that make gold very lacking in our current digital age. Number one is portability. So Bitcoin, the Bitcoin network, I think has created a next generation transfer of value method, whether it be peer-to-peer for business transactions, et cetera. If you decided that you wanted to take your gold somewhere, and this is you taking physical possession of your gold, to take it to another country, whether on a boat or on an airplane, et cetera, it doesn't seem to make a ton of sense, based on how heavy it is, et cetera. But Bitcoin, basically, your value is living on the internet, can be accessed anywhere in the world. And therefore, you do not have to worry about transferring. You do not have to worry about its portability. That being said, you can also look at two charts, and particularly one recently, of the value of gold versus the value of Bitcoin. And I would argue that as an adoption story, Bitcoin is beginning to take a significant share from gold. And I think we're only going to continue to see that. So why I personally don't have any problems with people holding on to a small position of gold in their portfolio. I think it's actually probably prudent. I would argue that Bitcoin is a superior store of value. Another argument from the gentleman's article that you sent is that gold, if the price were to reach a certain level, is not exactly finite, right? We could increase the gold reserves around the world approximately at 3% every year if we went to full mining capacity. And then there's some guys who are very futuristic who have identified asteroids that are made up of massive sums of gold. Now the logistics of getting to that asteroid,
would be gold inflation.
It would be. So it could potentially. And what about under the sea? If we were able to realize mining opportunities under the ocean and find a massive gold reserve unlike anything that people have ever seen.
Yeah.
So compare that versus Bitcoin, which is hard capped mathematically, all based on computer code at 21 million total. And as we mentioned before, the supply decreases every 4 years. It is cut in half in regards to the new supply of Bitcoin that are hitting the market. That Bitcoin actually becomes a harder asset than gold over time. So to me, and I understand his argument that a gold-backed currency would be a perfect currency. I personally believe that in the digital age, Bitcoin is superior.
Yeah, it just has so much utility to it. It's useful. Gold itself is not useful except in the worst of cases scenarios. And I own some gold. I think everyone should. It has a place in the portfolio, but it feels like Bitcoin ought to be above that. It's like things really get bad, and the grid has gone down, and there's no electricity, and we're scrambling for bullets and guns and whatever. Like the real bad case stuff. You're probably going to need some gold or silver for that. But short of that, but then gold. I also have understand Bitcoin takes a ton of energy to maintain. Um, I think the last stats I saw was it's more energy than Great Britain and the Netherlands combined is just to maintain the Bitcoin network. Um, we just saw in Texas this week the Texas grid basically go down for half of the state because of all the renewables that people think is going to be our way out of the wilderness in terms of climate change. Um, and then you've got bad actors out there that we know are hacking or trying to hack our electrical grid and grids around the world. If the grid goes down, what happens to the Bitcoin?
Sure. So to answer your first question, in regards to mining Bitcoin, it is very energy intensive, right? It takes a lot of energy to power these large server farms that are processing the Bitcoin ledger and that are mining new Bitcoin.
And a lot of
Majority,
just to interrupt, a lot of these big server farms, they build them close to renewable energy supplies like hydro plants or geothermal, formations in Iceland and other places. And because hey, you need energy, it's at least free there.
Exactly. So a ton have popped up in Iceland because of geothermal. Some in China around the large hydroelectric plants they have there. Some in Alberta, Canada, where the weather's cold and cools the server themselves, and they are able to bring in the natural gas, which is generally just burnt off around these oil refineries because it's a byproduct, and they do not have the ability to transport it. They don't have a pipeline to transport the natural gas. So that being said, the Bitcoin miners are actually finding more innovative ways to use green technology. And I think this gets overlooked in the media
That's
because it's not,
awesome. I never thought of that. What an angle.
they are. So because they're looking for the cheapest option, right? In regards to these Bitcoin mining operations pop up around very cheap renewable energy sources. So I would actually say that they're almost green energy innovators in a way because they're incentivized to find cheapest, most renewable forms of energy. So the argument that Bitcoin is somehow a major contributor to climate change and CO2 emissions, I'm personally, I disagree with that. I believe that Bitcoin, not only are they going to
Interesting.
find more innovative ways to create electricity to continue these mining operations, but you're also, and let's look aside from Bitcoin for a moment. You're also seeing mining is called proof of work, and proof of work means the miners validate the blockchain and make sure that it remains secure and make sure that
Hmm.
everyone's being a good actor and processing and doing their part. What's coming next, and you're about to see this in Ethereum, which is the second largest cryptocurrency by market cap, is you're about to see what's called proof of stake. They're moving to a network called Ethereum 2.0, and this is where cryptocurrency holders can then offer and basically lend their cryptocurrency, their holdings to the network to process new transactions. And in return, they receive a very attractive yield. So this is actually, it's going away from the mining process for a lot of these cryptocurrency projects and is going towards a more environmentally friendly and even more tech savvy proof of stake. So the innovation is already happening in the space. Bitcoin mining, I do not believe is going away, but I do applaud the miners for them being conscious that they do not want to have that reputation as having a large footprint. They instead want to find green energy solutions to their energy use.
Right. I mean, after all, this was Bitcoin itself was a reaction to the great financial crisis back in 2008 through 10. And this was done out of an altruistic way to provide, from anonymous donors, effectively. We don't know who they are still to this day, who wanted to provide an option that just didn't allow governments and their banking cronies to just debauch our currency, something that we could count on. And I think I don't think they, I wonder if they're still alive, number one, and if they're thinking, I never thought that this could be this big. And I'm also amazed that they haven't disclosed who they are after all this time. So that really speaks to me to the altruistic nature of the initial founding of Bitcoin. What are your thoughts there?
So the gentleman or the group who started Bitcoin and wrote the Bitcoin white paper come under the alias Satoshi Nakamoto.
Right.
Not an actual individual, could be a group of individual. Either way, they're extremely intelligent, and they felt that the bailouts that came in 2008 and 2009 were going to erode purchasing power for everyday people, and they wanted to create a more resilient money. That was the original idea behind Bitcoin. The gentleman or the group who founded it, I believe he owns over 1 million Bitcoin. And this is in a wallet that has never moved. None of this Bitcoin has moved. So at this point, with a value in the tens of billions of dollars, $47 billion, and none have been sold. To give
Right.
you an idea of the idealistic nature of this individual, this group of individuals.
So shouldn't Satoshi Nakamoto be on the Forbes like richest people in the world? Should be.
Or a Nobel Prize winner, in
Or a
my
Nobel
opinion.
Prize winner? Yeah.
But instead, he or she or the group has decided to remain anonymous. And I think that it's only adds to the story for me.
Sure. Interesting. Interesting. So what are your thoughts about how and if, because when something grows like this, the technology, a store of value, it's now competing with the big boys. It's competing with the US dollar as a store of value, which has been really the only game in town globally for, since the Bretton Woods Agreement in the 40s, late 40s. So um, I'm thinking that anything that's perceived as a threat to the U.S. dollar, or call it this way, the U.S. T-bills, not the dollar so much, is Treasury securities, because companies hold Treasury assets on their balance sheets, corporations, as a form of liquid holdings, Treasury assets instead of cash. It earns at least some yield. Um, so if Bitcoin is growing like this, and you're seeing companies like Tesla and MicroStrategy, and I can't imagine we're not going to hear about from Apple and all these companies about this. Um, is that a risk? Is the government going to say, "Wait a minute, these guys are too far over their skis, and we're going to, hammer them with legislation, um, so that it's just not a threat anymore"? Can that even happen, or how do you view that as a risk?
Sure. So I would ask, how do you shut it down? There's no single entity, there's no single choke point of Bitcoin. As discussed, it's a decentralized network that
The
trades.
beauty of decentralization.
that
Yes.
that is the innovation here. That is what captured my attention, is decentralized, meaning it trades or is processed over tens of thousands of computers worldwide. Therefore, they can try and shut it down at the exchange level. And by the way, countries who have tried to outlaw Bitcoin have seen an uptick in 300% adoption amongst their citizens when they do try and outlaw it.
Yep.
So
You can't
it's
have this. I want it more.
they want it more.
Right.
So my thought is here that there's too much water under the bridge, Jim. I believe that with the institutional infrastructure built out around Bitcoin at this point,
The government cronies are now part of it, and the government's never going to shut down their cronies.
we need to adopt this technology, and we're going to see central bank digital currencies. And to me, that's a validation. People say, oh, I love blockchain, but not Bitcoin. To me, I say, how can you? Bitcoin is the invention of blockchain, and central bank digital currencies, which are beginning in China, and they're having serious discussions in the U.S. They're coming, and they're going to be based on blockchain technology. Therefore, in my mind, validating Bitcoin. So, but of course, those currencies will still be rife with the same vulnerabilities of can be printed to infinity and erode purchasing power, et cetera.
Key.
But
Yep.
but to me, the government may try and regulate it at the exchange level, but then it's decentralized, so it can be a peer-to-peer network. You and I could still decide to sell your home to me, in Bitcoin without going through a bank or a government entity,
Mhm.
right?
Which makes it
Therefore,
anonymous, which is why they're worried. I just listened to Bill Gates last night on Bloomberg. They were interviewing him and they asked him the Bitcoin question, and he laughed and said, geez, I wish I owned some. I didn't see this coming. And he had to admit that Elon Musk, not him, was now the richest guy in the world, and how and so on. But he's saying, well, and just to level set with the audience, Bill Gates, incredible innovator in our society, well-meaning guy. He is part of the. He's a government crony. He's a big government guy, and he is not. He is. He wants to track everything. Every item of your life is an asset or an inventory on a balance sheet. Part of the global, the Great Reset, and he was just sort of scratches. Well, it used to be part of, the Silk Road and human trafficking and all this other stuff. And I'm thinking, there it comes. Here comes the stock complaint from one of the smartest guys in the world. So I know he hasn't. I know he knows that it's a threat, but he's just protecting his own hide, really.
Bill Gates said he wished, this was a few years ago, wished that he could have found a way to short Bitcoin. I think that was closer to 7,000. Now it's at 49,000. So I think he's probably pretty happy that he didn't. And it's interesting. If you're going to commit a crime, I would personally rather do it in cash, which is untraceable, versus the Bitcoin blockchain, which once they see where you came in at an exchange level, they can track that transaction back to you going back 10, 12 years. The ledger is constantly updated and all records of Bitcoin are kept forever. Therefore, it seems like a very, very poor way to remain anonymous. That being said, Silk Road in the early days, sometimes criminals are the innovators in our
the
world.
innovators. Yep.
And now I think it would be, and there's privacy coins and things that we're not invested in, but I am aware of those projects that they tend to use now. But to me, the argument that Bitcoin is for illicit activities, no, it's gone mainstream. Okay, let's face it. Bitcoin has gone mainstream. It's gone to CNBC every 15 minutes because they know it entices their audience. And the big boys are playing in the space now. So Bill Gates has been wrong. And if you go back and watch that old CNBC interview, you'll see how much he's changed in regards to his tone on Bitcoin.
Oh God, yeah. And then you get guys like Warren Buffett, again, one of the richest guys in the world, and maybe the best friend of Bill Gates, comparing Bitcoin as rat poison squared. I mean, that's got to make you laugh. He's a funny guy, Warren, but he's almost 90. He doesn't understand it, doesn't want to understand it, and
I have an immense respect for Warren Buffett. I've probably read all of his biographies. My dad was a student of Benjamin Graham at Columbia, and so he had me sit down and read all of Buffett's books. Buffett, he's brilliant, the greatest investor of his generation. But let's look at his tech scorecard. Okay, yeah, he hit a good one with Apple, which you could argue is maybe more of a consumer company, but IBM, et cetera. He hasn't been the best tech investor throughout his career. And for him to come out and call it rat poison squared, I think was very surprising, because I don't think he fully understands exactly what Bitcoin is and the technology behind it. I think he was saying that as a knee-jerk reaction, and I was pretty disappointed with that response.
Right. And now you've got, just going back to the sort of, the threats, the perceived threats from folks. Janet Yellen was making some negative comments about Bitcoin, and JP Morgan talking it down, all the while that they have their own Bitcoin trading desk, and Goldman, same thing there. And it's like just what they do. It's what the cronies do. Let's talk it down so we can buy it cheap. But they all have an agenda. So it's important, I'm trying for the audience here. We brought on an expert here like Putnam to cut through that noise, because it's easy to listen to someone who you think you respect, and you should for some reasons, like Warren Buffett or Bill Gates or the CEO of Goldman Sachs or Janet Yellen, and you just assume that what they're telling you is the truth, and it's unexpurgated, and it was done on a sort of dispassionate, analysis of the facts, and that is not the truth. They have an agenda.
Absolutely.
So,
And go ahead.
No, you go ahead.
No, I was going to say, when you come out and hear the naysayers on Bitcoin and this technology, there is an incentive for them, because most of them have missed taking a position in the asset, right?
Hmm.
And you can see J.P. Morgan, Goldman Sachs, and a lot of the big banks were negative on it a few years ago. Mark my words, in the next 12 to 24 months, they're going to start offering this as an investment vehicle for their clients because they can't afford not to. The disruptive technology behind Bitcoin, decentralized finance, and smart contracts will render them obsolete in the future if they don't begin to adopt some of the technology as well as facilitating the transactions of cryptocurrencies.
I could not agree with you more. So an interesting thing, I mean, and this sort of goes back to our earlier discussion, my earlier description of Ethereum and its utility beyond just a store of value. Ethereum, with its smart contract, its ability to actually become I won't call it a programming platform to build applications on, and use those to create your own tokens. I can create my own locally grown coin token if I want, with a few lines of code, and it's ready to go, ready to be traded. I got to have some miners and put it in place. It's pretty, low footprint to get started. It's not worth anything until there's demand. But at the end of the day, you've got all these really interesting ways that people are using the fundamental blockchain technology that Bitcoin invented and that Ethereum has perfected. Can you tell us a little more about these decentralized finance applications?
Sure. So this is the other side to the coin from Bitcoin, and one that I am incredibly bullish on. Uh, the smart contracts ecosystem, let's take Ethereum, for example. Basically, written within the computer code are the terms of the contract for the buyer and for the seller. Once both terms are met, the contract automatically executes. Full contract, partial contract, depends on how much of the terms have been met, right? This
Hmm.
happens automatically, okay? Decentralized finance is basically allowing people to do financial transactions through smart contracts peer to peer without going through a centralized network, a JP Morgan, a central bank, without going through one centralized location. Why this is exciting is because look at any disruptive technology of the past, right? It has to be fast, it has to be cheap, and it has to improve upon the existing infrastructure.
Right.
Blockchain checks all of those boxes. For me, the smart contracts platform is a no-brainer for real estate transactions. I think it will disrupt the way we trade derivatives and process derivative transactions. And I believe fixed income is also in the crosshairs. Think about this for a minute. There's current cryptocurrencies currently that allow you to lend your crypto to a network and receive a very handsome yield in return during that time frame. Where right now you'd have to go out 30, 40 years on a treasury, or go out even further on a municipal bond, et cetera, to receive that target 4 or 5% yield that everyone's shooting for, right?
Hmm.
I believe that there will be a lot of adoption for individuals looking for fixed income in the future through these crypto lending platforms. And there's a handful of projects that I think have really created really attractive math that will have a lot of relevancy in the future.
Wow. Now that's amazing. When you start talking about as a better mousetrap for fixed income, I mean, fixed income is the largest capital market on the planet. That's sovereign nations, that's corporations. It's incredible. This has been a great discussion, Putnam. This is worth it, and we're going to do more of this, folks, because Bitcoin and cryptocurrency, I viewed it in sort of through my locally grown lens as being a way for even the average guy, the average person, that middle class person, that even low income person, to have a grub stake and just buy a little bit and just buy it and hold it and forget that you own it, because it's going to appreciate in value. Whereas the dollars in your wallet that you earn from the company, from all of your hard work, is being reduced in price and value. As a matter of fact, that's the government's goal. The Federal Reserve has told us that they are ready to tolerate inflation over 2% for as far as the eye can see. Inflation means that your dollar has less purchasing power, folks. So Bitcoin and cryptocurrency is the wave of the future. It's a way for a small piece of what you own. We're not talking about plowing your life savings into Bitcoin, though if you did that, you could have stopped working long ago, and many have. But a small portion is really something that everyone ought to consider. That even if you lost it, it wouldn't move the needle. But like I said, if you'd held on to it up to this point, you'd have been well rewarded. If any of you folks are interested in getting in touch with Putnam, please let me know and I'll tie you together. He's a really smart guy. I'm a client of Stormborn Partners and happy to be that way. And for those of you out there that are uh, qualified investors, high net worth individuals listening, and I know we've got a bunch of you, give me a call, send me an email, and we'll help you out here. Thanks so much, Putnam, and it's great having you on Locally Grown.
Jim, it was great to be with you.
You bet. Take care.
Bye.